everyone. My name is Olena Link. I am a realtor with Vista Sotheby's International Realty. Today I am excited to talk with Michelle Rogers, an experienced lender who will share some tips about the loan process for home buyers. Hello, Michelle.
Hi, Alina. How are you?
Good. Thank you for coming. Could you start by telling about yourself and your experience in the lending industry?
Yes, I'd love to. So I am a part of a mortgage bank called CrossCountry Mortgage. We're actually just named the largest mortgage bank in the country. And we serve the entire nation. We serve all types of borrowers that are looking to finance real estate. And me personally, I have worked here in Los Angeles for 23 years, helping and serving home buyers, hopeful home buyers and homeowners with their mortgages.
Nice. What are the first steps the buyer should take if they're considering a home loan?
That's a great question because I feel like preparation is the most important part. So I tell my clients that the moment that they're even curious about becoming homeowners, they need to connect with a lender and begin what we would call the pre-approval process for home financing. And that is the process that basically allows the borrower or the buyer to understand what their affordability is for a home, what they qualify for, and helps the realtor, you, know what homes you should be showing this particular buyer.
That's really helpful. Could you please explain what is the difference between pre-qualified and pre-approved?
Yes, there's actually a big difference. So pre-qualified is when you can go online and fill out a quick loan application, and essentially it will give you a pre-qualification letter stating that everything you submitted in the application is true and correct, but nothing is verified. So it's just taking your word for what you put for income, assets, credit, everything. Pre-approval is much more reliable because that is where a buyer will fill out a loan application, but then also submit to the lender all of the supporting documents. So as a lender, I would at that point run their credit and review their actual credit report. I would ask for verification of their income, whether it's pay stubs and W-2s, tax returns, and also I would ask for evidence of their down payment via bank statements. So a pre-approval means not only did the buyer apply for a loan with me, but I have now done the due diligence to make sure that the information on the application is in fact true and correct.
Okay, nice. But I know that you have fast track process. Can you please share with us?
Yeah, the fast track process is the gold standard. So a lot of buyers are not aware that in the purchase agreement, when you make an offer to buy a house, one of the questions you have to answer and tell the seller is what stage of this process you've been through. Are you pre-qualified? Are you pre-approved? Or do you have fully underwritten pre-approval? So our process we call fast track, and basically that means we have actually had your entire loan file underwritten by an credit underwriter. So your approval is already decisioned. And what's great about that for buyers is, and for realtors is, you can make a very competitive offer because you can waive your loan contingency if you would like, because you already have full credit approval. And you can also offer a shorter close of escrow period because you've already kind of been through the first half of what is typically done through escrow. So we call it making our buyers cash-like.
Wow.
So it's been very helpful for our buyers to be more competitive. As you know, inventory is tight.
Yeah.
So it helps buyers look more attractive to a seller.
Nice. So the fast track process sounds really awesome. Knowing that I can waive the loan contingency and maybe the appraisal contingency makes my offer stronger. I can compete with the cash buyers and I have a great chance of winning the deal, right?
Correct. It's actually been really instrumental in a lot of my buyers winning in competitive offer situations. It's pretty unusual in LA County especially to have a house come on the market and only get one offer. What's more common is there's 2 or 3 or 5 offers. It can be even more than that. So anything that you can do as a buyer to set you apart from the other buyers and make your offer look more secure to the seller is going to help you win in any of those situations.
So there are several types of loans out there. VA loan, FHA, conventional, and even more. Could you break down the main types of loans and which buyer they are best suited for?
Yes, absolutely. So conventional loans, like you mentioned, they are basically kind of your standard bank loans. And they are generally full documentation loans, meaning we have to verify employment, income, assets, credit, everything. And they can require lower down payments too. We can have some loans that only require 3% down, but generally a lot of people putting 20% down will get a conventional loan.
Okay, so for conventional, we can put 3% down?
3, it depends on the loan amount.
Okay.
So some loan amounts you can put 3, some require 5%, and then up from there. FHA loans are really great loans. Those are loans specifically designed to help more people become homeowners. So there's a few things about FHA loans that are helpful. Number one, they only require 3.5% down. So one of the lower down payment requirements. Also, FHA is more lenient when it comes to minimum required credit scores. And they're more lenient when it comes to the buyer's debt to income ratio, which is a calculation that we do when qualifying a person for a loan that looks at their income as opposed to their monthly housing expense and any other debts they may have. So on conventional loans, they're a little bit stricter on those guidelines, on credit score guidelines, debt to income ratio guidelines, down payment requirements. So FHA loans have been marketed, as great loans for first-time home buyers because it's a little bit easier to qualify. Let's see. We have VA loans.
VA, yes.
Those are amazing. Those are some of my favorite loans to do. They're so deserved. That's for our veterans that have served our country. And those loans require no money down.
Oh, wow.
Yes.
I wish.
I know. I mean, they're amazing. And there's no mortgage insurance.
Nice.
On those loans. So they're wonderful loans. And I always remind my agents that I work with to ask every client if they're a veteran, because many of our clients maybe served a long time ago and now they're in the regular workforce, but they still have their VA benefits from when they served. So it's a great question to always ask. The other thing that's cool about VA with us is we don't have any loan limits for VA loans.
Oh,
which is
for 5 million, 10 million?
If the borrower can qualify, we have no loan limit, where a lot of banks do have loan limits on VA loans.
Wow.
But generally, VA does not have a loan limit if they can qualify. So that's kind of exciting. One of my favorite loans that I do a lot, and I know you and I have talked about these loans together, is what we call non-QM loans. And they fall under the umbrella of a conventional loan, but they don't follow the more stringent guidelines that qualified mortgages have to follow. So this is a product that we end up using a lot for our self-employed clients.
Okay, I wanted to ask you about these kind of loans. So what do they need to submit to get these loans?
So we have a lot of different variations of these loans for self-employed clients. It depends on each person's individual situation. So for example, one of them, we can qualify them on 12 months of their most recent business bank statements.
Okay.
So instead of asking them for tax returns, We just look at 12 months bank statements.
So you don't need tax returns at all?
You don't need tax returns at all.
Wow.
We don't look at them. We just literally look at the cash flow coming into the account for the business. We also have a program where we just look at your most recent 1099 if you're that type of a self-employed person where you're a subcontractor and you get 1099 by different companies. We find these people a lot in the entertainment industry and real estate industry, construction. So we have a program specifically designed for them where we just look at their most recent 1099 for qualifying them. We have an asset-based loan program. That one's been incredible. We help a lot of retired people with this type of loan because oftentimes people that are no longer working, they may not have a lot of income to show that they're earning every year, but they've accumulated a great amount of wealth. So they may have $1 million in a retirement account that they accumulated over the course of their life as a working professional, but now they've retired. So they don't show the income to qualify, but we say it's okay. We can take this asset you have and use this to qualify you. So that's called an asset loan. So yeah, I mean, those are some of the most popular ones, but we have a lot of variations on these, but it's a really important niche because I always say the self-employed borrower is the most underserved borrower.
Yeah.
They really have, if they walk into just a regular bank, they have a very difficult time getting approved. So we have an entire line of product that specifically caters to this clientele.
Okay, wonderful. And the most common questions from my buyers is, how much is the closing cost?
So closing costs, it's hard to tell anybody exactly what they will be because on every transaction they hire a particular escrow company, a particular title company. There is a lot that is the buyer's choice. They're going to get to make decisions that will impact if their closing costs are higher or lower. And it's within their control. So until they make all those decisions, we won't know exactly what their closing costs are. But what I always tell people as a general rule of thumb is that your closing costs are going to be somewhere between 1% and 2% of your purchase price. So it's not perfect, but if people are trying to plan, like, do I have enough for my down payment and my closing costs? I tell them just to use, between 1% and 2% of the price they're looking at as a good estimate.
Okay. 2%, it's not a lot.
Yeah, well, I like using the 2%. I would rather a buyer be more conservative and be prepared for that. And then if it's less, great.
Yeah.
So like on $1 million home, if you're putting 20% down, that would be your $200,000, and then 2% of the price is another $20,000. So that person should basically be prepared to have around $220,000.
So what is your best advice for someone who is currently looking to buy a home? Should they wait for interest rates to go down, or should they buy and refinance later?
Well, everyone has a different opinion about this, but I really look at the numbers and the math because to me it can't really be manipulated. It is what it is.
Yeah.
So for me, what I'm advising, my best advice to clients is if you find the right home and you can afford it at today's rates, you should buy that home because you don't know when the right home is going to come around again for your family. As you know, Alina, this area has homes of different ages, different styles, different sizes. So you can't assume like, oh, I'll just find another house that suits my family, right? Sometimes it could be a year before another house you like becomes available. So what I tell my clients is if you find the right home for your family, that's the most important thing. If you can afford it at the higher rates today, the good news is the minute rates come down, we can refinance you into a lower rate, but at least you have your house. So, and it's really impossible to time the mortgage market. Like, I've watched people try to guess when, oh, we're going to hit the bottom. Nobody knows.
Yeah.
Even the experts are only right half the time.
Yeah.
So it's impossible to do that. So I just tell people, you find the right house, buy it, get your family moved in, enjoy it, and when rates drop, we can refinance you. The other important part of that advice and why I believe in it so much is even with the last few years with rates being higher, real estate has still appreciated every year.
Yeah.
I mean, they're projecting 5%. The most conservative people are projecting 5% this year, appreciation. So every month you wait to buy a house, that price is going up. You will pay more for that house. So what I think is great is get in before the house keeps going up in price, because we can always put you into a lower rate loan.
Right. And again, there are a lot of buyers over there. We don't have any, like, we don't have the inventory, right? Enough. Actually, in my opinion, through my experience, I know that buyers who has a down payment and they are ready to buy, they don't wait for interest rate to go down. They just go buy and they know that they can refinance later.
Exactly. No, you know, there's no prepayment penalties on mortgages. So nothing stops you from taking advantage of lower interest rates when they are available. So, you know, I have a lot of buyers that bought their homes in February and April of 2024, and I've already refinanced them once this year and dropped their rates like 0.5% from their original rate. And I'm expecting I will refinance them 2 to 3 more times probably over the next 18 months, because rates are projected to continue to go down all the way through 2025. So you just can't know exactly when you're hitting the bottom of rates. So it's just better to focus on finding the right house, because to your point, there isn't a lot of inventory out there. So if you find the right house, get it. You know, don't lose that perfect house. But we also, just on a side note, I want to mention the 2-1 buy down. For some people, if the affordability is difficult, we have some special programs like the 2-1 rate buy down that helps make the home more affordable for the first 2 years while the buyer is watching rates for them to go down and refinance. So that's been a really wonderful program for a lot of buyers to be able to buy now and not wait.
Okay, and do you think the interest rates will go down to 3, 4, 5%?
No, I don't think they're going to go down to 3 or 4. I mean, what Fannie Mae and Freddie Mac, which are two of the largest, mortgage companies in our country, what they are projecting, and you can actually go and look it up online. I mean, they put it in their reports. They're projecting that mortgage rates will be somewhere in the 5s by, later 2025. So I think for sure we're going to get into the 5s. If we get into the 4s, that would be amazing. I mean, everybody would just be beyond thrilled, including myself. I would refinance too.
Me too.
Right? But I can't imagine it going into the 4s or the 3s, honestly. I think that's my opinion, but who knows? I mean, no one expected them to go into the 2s and the 3s when that happened the last time. So there can be another crazy global situation, we just don't know.
Could be.
Hopefully not a bad one.
Thank you so much, Michelle, for all the information. I really enjoy working with you because you are always available for me and for our buyer. You follow up with the listing agent when I submit an offer to assure them that the buyer is serious and they have all necessary documents for the loan. You guide the buyer through every step, explaining all the details so they know what to expect and feel supported. Thank you so much for that.
Oh, my pleasure. Yes, it's, even though we do real estate all the time, our buyers, sometimes they only buy one home in their whole life. Or if they're downsizing, maybe it's the second house they've bought in 30 or 40 years. So I always remember that, and I know how much guidance they need. They're excited, but also a little scared and nervous. And I tell them that that's normal to feel all those things, right?
Yes.
So yeah, I think it's really important that we educate them, have high level of communication so they feel totally secure every step of the way, and that they are confident they're making the right decisions with the whole process from beginning to end. So I think I can't imagine, somebody trying to get through this process without a professional realtor like you guiding them through the negotiations, through the inspections, all the things you have to do. And then on my side, through all the documentation and paperwork and understanding the loan products and the options. So they need that support for sure.
Yeah, thank you so much. If anyone watching has questions, please reach out to Michelle to find out what you qualify for, and I would be happy to find your dream home. Thanks again, Michelle. Please don't forget to subscribe and hit the notification bell so you never miss an episode. See you next time.